What's up guys, Ben here and welcome to Motivation to Invest. Today I'm going to be discussing a very special travel stock which has actually benefited from this entire global health crisis. But before we dive into that, if you're new around here, why not consider joining the investing community by hitting that subscribe button and turning that notification bell on, only if you want more investing tips and exclusive stock market picks which I'm personally invested into. And if you want to take things a step further, hit that first link in the description below to be taken to the Patreon page. Now that is for the VIP membership group. Now in the VIP membership group, you guys will get access to my buy and sell signals. So when I make my moves, you can make your moves, in addition to my entire investment portfolio, the stocks and the story of how I built that portfolio to where it is today. Also, if you check out the second link in the description, that is for the Stock Card platform, which is the research platform I'll be using in this video. We're also a sponsor of this video. So what's the stock that's benefited from the global health crisis? Well, the company is called Thor Industries and they're an RV manufacturer. So the company sells towable and motorized RVs or recreational vehicles through its subsidiaries, brands including Airstream, Heartland RV, Jayco, Living Light RV, and many others. The company's headquartered in Elkhart, Indiana, and was founded back in the 1980s. You may be thinking, Ben, is this industry actually interesting? I thought you'd be talking about airlines and hotels and all these travel companies and maybe even Airbnb. And I spoke about them many times before. This company has many tailwinds behind it, and so does this industry. So according to Mordor Intelligence, the recreational vehicle market is anticipated to register a compound annual growth rate of over 6% during the forecast period. That is between 2019 and 2025. However, this trend has actually accelerated due to this global issue. As if people can't fly, they can't go on normal travel vacations, then what can they do? Well, they can still travel locally using their RV. So according to the RV Industry Association, there has been over 47,326 RV shipments in October 2020. Now that is so surprising considering we're supposed to be in a recession. This has been a 21.4% increase over October 2019. So people are buying 20% more RVs now than they were last year before this whole global health crisis. And to me, that's absolutely incredible. And it's something that I think Wall Street is overlooking. But luckily, as subscribers to this channel, I'm going to alert you of these tailwinds. So if you appreciate that, big thumbs up for the YouTube algorithm. So we're on the investor presentation right now. The company's had net sales of $2.54 billion. They've got 23.7% in the European market via a couple of acquisitions. They've got a motorized percentage of around 20%. Towables make up just over 50% of their current market. The company has a gross margin 14.9%, and they have an RV backlog. That's those RVs which have been ordered but have just not been made yet, of over $8.92 billion. Now that is incredibly high. So with any manufacturing business, looking at their inventories as a data point can be a great indicator of the business's health. So let's say the company's inventories is rising. That means they're not selling the products that they should. Whereas in this case, we can see the inventories are at an all-time low, lower than they've been in 2019, 18, 17, and even 16. Now you may be saying, Ben, that sounds okay, but what's so special about this company? Well, I'll tell you. It's the valuation. So here we are now on stockcard.io. This is a very easy to use platform for analyzing stocks, and we're here with Thor Industries, ticker symbol THO. You can see here the company's got high growth potential, strong operations, calm investor sentiment currently. So it's an undervalued stock with high growth potential. Now that is what I like to see in this game. You want to see the growth at a great valuation, which is such a rare thing to see. So revenue year-on-year growth, 17.54% year-on-year growth. So 3-year compound annual growth rate has only been around 4%. So you could make the assumption that this growth we're seeing this year is only due to this global health crisis and it won't continue into the future. Now arguments can be made for both sides of this argument, but it's still very interesting to see. So the current fiscal year revenue growth estimate is 28.84%. The company also pays a dividend, which is just the cherry on top. So we've got growth, we've got valuation, and we've got a dividend. So last 12 months dividend yield, 1.73% positive yield. They've been increasing the dividend over the past few years, the company only pays out 30.92% of the earnings as a dividend. But this is the bit I'm excited about. It's the valuation of this company. So price to earnings ratio, I can actually use this with this stock. Like, I've been covering many growth stocks recently, many tech stocks. They're not profitable. I can't even use a price to earnings ratio, but in this case, I can. So the price to earnings ratio is around 18. Now, this is currently half the sector's relevant PE ratio, so that's a very good ratio. Price to sales ratio, less than half. So usually when I discuss companies on this channel, I'm discussing companies which are paying 2, 3, 4 times, 10 times, even 70 times the company's sales. This is paying 0.6 times the company's sales. So for every $1 of that company's sales, you're paying 60 cents. And the price to book value, just 0.57. So this is definitely an undervalued stock right now. But arguably one of my most favorite metrics, which I rarely get to use on this channel, is what's called the PEG ratio, or the price to earnings growth ratio. Now, this is a metric which helps to calculate good value companies with high growth prospects. And basically anything less than 1 is a gold mine. So this company currently has a PEG ratio of 0.5. So that is incredible. What you're paying for the company's growth is definitely worth it. According to StockGuard, the most common strategy for this stock is in a buy and hold portfolio. So what about the balance sheet? Because maybe this company's got a lot of debt, that's why they're at such a good valuation. Well, you'd be wrong. So your current ratio, which is how much cash has this company got on hand to pay off its short-term debts, that's those due within the next 12 months. Now, generally, I look for at least 1.5 to 2. This has got a 1.39, which is still extremely good. The debt to equity ratio is 0.72, so that's not too bad as well. It's better than a lot of the benchmarks in this industry because this is quite a capital intensive industry as they have to actually build these RVs every time one is ordered. But the company is profitable. It is cash flow positive, so $411 million cash flow positive. So overall, this is a really interesting stock. We've got growth of over 15%, dividend of over 1.5%, and we've got a great valuation with a PEG ratio of 0.5. So what are the negatives with this stock? Because it does seem like a steal right now. Well, the only negative I can personally see with this stock is once travel starts to reopen, will people stop buying RVs as much because they can simply hop on flights, take normal vacations, or will this RV trend continue? Second risk, can we put this company's growth down? Have they had a special year where people were dying to get out of the house and they just had to buy an RV and go traveling around with it? Is this year an anomaly for the company? So due to everyone being locked down, they've been dying to get out of the house. They can't do normal vacations. So they've gone and purchased an RV to travel around their local cities and states. Now let's dive into the share price of this company. So the share price before the global health crisis, we're looking at around $85 per share. Now it's only at $94 per share. So it did drop, of course, due to the March crash. And then it's increased since then by around a 148%, which is pretty sweet. Market cap, this is what I like, $5.15 billion. And as I showed you previously, the company's net sales is just $2.5 billion. That is how we get such a great price to sales ratio. So usually when I discuss stocks on this channel, I discuss those that are making $1 billion a year and their market cap is $20 billion. So you're paying 20 times the company's sales. The company's market cap is just $5 billion and they have $2.5 billion in sales. Now, yes, this isn't a software company. They don't have as high margins as many of these cloud-based businesses, but it's still a very interesting play, especially if you want some exposure to the RV market. Now, I'm still in the process of researching this stock, so like all the videos I mentioned on this channel, this is not financial advice. If you guys want to know exactly when I'm personally buying and selling stocks, then be sure to check out the first link in the description for the VIP membership group. So if you click that first link in the description, you'll be taken to Patreon, where I've made an entire video which discusses all the different tiers and packages which you will get inside the Patreon. So you'll get access to my buy and sell signals, so when I make my moves, you can make your moves, in addition to my entire 6-figure portfolio, the stocks, and the story of how I built that portfolio to where it is today. But that's not all. You'll also get access to our VIP Discord chat, where we discuss various different investing topics and we give early alerts on new stocks when they come on the scene. So if that's something that you'd like to sign up for, or you're just curious, then feel free to check out that link, head over and just watch the video. And before you panic and think, wow, this is some expensive course, it's only the price of a coffee. And I personally think the amount of value you get is absolutely incredible. So feel free to watch the video and see if it's right for you. With that being said, if you guys found some value in this video, then feel free to give it a big thumbs up. That helps out tremendously with the YouTube AI. And if you're new around here and you still haven't subscribed yet, what are you waiting for? Go ahead and hit that subscribe button, turn that notification bell on, only if you want more investing tips and exclusive stock market picks, which I'm personally investing into. With that being said, I hope you guys have a tremendous day, and I'll see you in my next video. Invest safe.